Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Welcome, everyone. Thank you for joining Toolkit Tuesday today. We have a guest speaker from Mainvest, Isabel Strobing here. As I introduce her, I would love to have you all put your name in the chat below to let us know where you're tuning in from, whether it's Louisville or somewhere else around the state or somewhere else around the country. If you have questions during the presentation, also feel free to put them in the chat or the Q&A box. I will keep a monitor on that, and then we will get to those at the end of the presentation. We'll do a little Q&A for the last few minutes. Welcome, Janet. Thank you. And here we go with Isabel. Thanks for joining us today.
Hi, thank you so much for having me.
Absolutely. So you work with Mainvest. Tell us just a quick snippet before we get started in our presentation. What is Mainvest?
Sure. So Mainvest is the investment platform for Main Street. So we work with small businesses exclusively, small brick and mortar Main Street style businesses, enabling them to raise capital compliantly through our platform from everyday local investors in their community.
Awesome. So this is another tool aside from traditional debt financing through a bank or a lender. This is a way you can do your own community building, community investing. And Isabel's going to teach us all about it today. So without further ado, I'll let her share her screen and we will get started.
Great. Make this open. Perfect. Can everyone see my screen okay?
Yes.
Perfect. Great. Well, like I said, my name is Isabel. I'm with Mainvest. We're based in Salem, Massachusetts, but I do want to mention that I spent 2 summers in Louisville when I was in high school, and I absolutely loved the community. I loved a lot of the businesses that I had the chance to explore when I was there. And I haven't been back in many years, but I would love to take a little trip and hopefully meet some of your businesses as well.
Awesome.
Yeah, I loved it. So to dive in here today for our presentation, it's a really high level view of what Mainvest is, how we operate, and basically what our model is, how we work with businesses to raise capital. It is pretty high level. And so, I'm happy to provide more detail as needed based off of the questions or follow up afterwards if there's anything that I haven't gotten to. But Mainvest really represents kind of a paradigm shift in how we approach small business finance because it's so business driven. And because of that, there's bound to be some questions just because it's a little bit different than anything that's really out there right now. So let's dive in. So like I said, we are the investment platform for brick and mortar businesses. The big draw here is that we're using revenue-based financing. So unlike traditional lending or private investment, these are basically performance-tied repayments. It's a very flexible debt structure tied to revenue. And the idea here is rather than this coming from a single source, this is crowdsourced, basically debt financing. So the idea is it's kind of like crowdfunding in that, you're able to go out to your community as a whole and build up market validation, customer loyalty by bringing all of these investors together. Not only are you accessing funding on the terms that you need, but you're also engaging the community in this new way. So on both the financing side and the marketing side and really the community building side, there's all of these opportunities here. It's designed to be quite accessible, both to a business in terms of our onboarding process and how we set up the terms, so also for investors in that the investment minimum is usually $100. So the idea is a lot of people from all walks of life can participate. The idea is through Mainvest, we're enabling you to run this campaign, helping you through the onboarding process, the terms building process, the fundraising process, and the repayments on the back end. So with Mainvest, there's really this great opportunity here that it really ties into tapping into, capital that has previously been untapped. So with Mainvest, the idea is that you're really engaging investors in your network, people who you didn't even realize could be investors, but also getting access to outside investors as well by nature of running a public campaign, but also being on Mainvest. So to date, we've worked with over 400 businesses, over 30,000 investors, to raise close to 35 million. And these are in relatively small raises. We're not working with huge businesses that are doing these, seed, tech rounds or things like that. We're really working with businesses. Our average raise is about 78K that are small, local, and are really engaging many community investors rather than just one or two angel investors. So it really is kind of a paradigm shift in how we're approaching and democratizing investment. Sorry about that. So one of the biggest draws here is not even just the idea that you are getting funding on good terms, it's who you're getting the funding from. And the biggest difference here is at the end of the day, we'll talk all about the terms, we'll talk all about the financing piece, but by running any sort of community investment round, what you're doing is building customer loyalty in really a new type of way. And what we have found in surveying our investors is that investing this way does make a tangible impact on where they spend their money. So when you bring in local investors, they're 72% more likely to actually patronize that business. They even 54% of the time encourage other people to go to the business as well. So whereas in other types of funding, like or in crowdfunding, for example, people might donate, they might have an emotional tie to the business, but because there's both an emotional and a financial tie here, we find that that really impacts how investors spend their money and how they evangelize the business long term. And that generates more revenue for a business and more support long term throughout the ups and the downs of running a business. So where we operate is really across the board. This model really does work for all different types of businesses. As long as you're kind of a Main Street style cash flow focused business and revenue-based financing is something that could work for you, this general community investment model really works across the business life cycle. So I have a couple different examples here. Actually, one kind of close to home for all of y'all is the wine shop over in New Albany, Indiana. They just raised a quick 30K from their community. Their community was saying, we have all this outdoor space. We'd love an outdoor patio. And so just in time for Derby season last year, they raised a quick 30K to build out that patio, really quick project, very clear use of funds. And now they repay with their revenue. We've also worked with Glowworm Play Cafe, who's now run 3 different campaigns for different locations to kind of more significantly build out an entire space. And what's been really interesting about that is that these campaigns that Glowworm Play Cafe has run, have kind of involved supporters of the brand as a whole, as well as each subsequent raise engaging brand new investors from those specific communities where that Play Cafe is going in. And so it's been a really powerful way to raise, a significant amount of money to do a full build out of a Play Cafe, but then also engage investors and eventual customers in all of these different communities. So, like I said before, our average raise is around 78K, usually around something around like 100K. And so these are most common, but we also work with businesses at the other end of the spectrum, those who have kind of even moved out of being considered a traditional small business and are really investing in distribution, in growth. Eastern Market Brewing is, a pretty large company out of Detroit, and they worked with us to raise over $1 million from like their huge network of supporters who were all so dedicated to the brand that they felt, ownership now in the continued growth of the brand. So whether you're a total startup business or a super established brand, there's likely something that will work with you in terms of like the Mainvest fundraising process. The idea here, it really is that we're focused on local economic growth. So rather than come at this as even just a one-to-one, an individual business that needs funding from their individual community, we really see this working as like a community-wide, a regional, even a national shift in how we are approaching kind of like local finance. The idea is the more businesses that raise in a given area, the more investors are generally investing in the small business growth of that area. And as those returns go out to those investors, they reinvest those returns either by investing in new businesses or just taking those returns and kind of generating more economic growth for the region. And the idea is that this really does create a closed loop economy whereby the people who are actually within that community are financially supporting it and vice versa. So rather than economic development coming from above, a large company just coming into one place and maybe creating some great jobs, but maybe not adding to the vibrancy at all. With Mainvest, what we're trying to do is make sure that everyone is benefiting from a really locally focused type of economy. And we have seen this work time and time again. So I've been talking very high level about the concepts of Mainvest, and here I'm going to dig a little bit more into how this all actually works. So we are a crowdfunding platform, basically, where you're setting up a campaign, you're running that campaign for a couple of days, and then you're closing on funds and repaying investors. So throughout that process, rather than, lending where, you go through an onboarding process and you're given a set of terms, we work very closely in partnership with every single business to really structure a raise and strategy that works for that business. So throughout the onboarding process, you kind of have a member of our staff working with you directly. You set your own terms with our, kind of advice and input. And you really set the pace of play for the onboarding process to really make sure that you're set up for success. You go out with a beautiful pitch page that we help you build, usually for a 30 to 45-day campaign where you are actively pitching to your community this opportunity. And then on the back end, we still help you with those quarterly repayments. So, similar to how you're repaying a loan every month, with Mainvest, it's you're repaying investors every quarter, and we help process all of that so that you're not, sitting around figuring out what every investor's owed and writing all of those checks. So everything is done through the Mainvest platform. So there's a single source of truth throughout the process. So talking a little bit more about the revenue sharing note specifically, I'll try and keep this high level. I have a tendency to ramble about this a little bit just because I believe so deeply in the power of revenue sharing. And I really believe that it is almost always the best option for a small business, because at the end of the day, the cost of capital is not all that different from other types of lending. And especially in this interest rate environment, it can actually be lower. And so on many metrics, the revenue sharing note is similar in terms of cost of capital. Notably, it is not collateralized, it's subordinate to third-party debt. And so it is quite founder-friendly debt itself. Outside of that, the structure of it itself tends to work really well for small businesses because it's performance tied. So as businesses face seasonality, rather than having one repayment that's the same every single month, your quarterly repayment really follows the growth of the business. So some repayments will be a little bit smaller if revenue is lower. Other repayments will be higher when revenue is stronger. And the idea is, investors then are also incentivized to support the business because they're not just getting that same repayment every month. Their quarterly revenue is based on the performance of the business. So the more they can support your business, the stronger returns they're going to see. At the end of the day, the total repayment is capped. So this isn't something that lasts into perpetuity. It really is kind of just taking out a loan from the community, but repaying it more flexibly. So there's a lot of power here, both in terms of process, the fact that you're getting market validation, you're raising from all of these people, you're getting awareness, but also in terms of structure. So at the end of the day, having a relatively low recourse, non-collateralized loan that engages the community is generally a good thing for a small business. It's generally considered a good type of debt to have. So in terms of the actual fundraising process, that's something I want to touch on here. It's something we talk about with every business in a ton of detail, and every fundraising strategy is a little bit different based off of how long the business has been around, how large their following is, if they have any marketing campaigns coming up. But in general, here's how it works. So this is the actual fundraising process. So we've already gotten through the terms, we've already gotten through onboarding, and you press launch your campaign. It's day one. The way we like to think about this is kind of going small to large in terms of audience. So you start out by activating your campaign with your close network, thinking about friends, family, regulars, the people who you know are your top supporters. The second phase is once you've kind of gotten some of that early investment in, going to your community and beyond. So thinking about who are the people who follow you on social media, who maybe just haven't been in a while, who are on your email list, but you wouldn't consider a close regular, kind of reaching those people and the community at large. And the good news about that is that by promoting an investment campaign, you're also just promoting the business. So you can really think about it as just another arm of your marketing. Phase 3 is actually in engaging the Mainvest network. And so another huge benefit of working with Mainvest is that you're not completely on your own here like you are in other types of fundraising. So just by being on Mainvest, you're able to kind of get your business in front of a lot of different eyeballs, people who might be interested in your industry or might have invested in other businesses in your state or in your region. And you're able to really use your Mainvest campaign and the traction that you've gotten from your own community to promote your business out to the Mainvest network. And more often than not, you will find a couple Mainvestors who want to, pitch in and contribute just because they like your mission, and they might even just like the idea of investing in their community or in Main Street in general. And then the fourth phase is really just the closeout of any big marketing campaign. We find that there's, a big rush at the beginning, a plateau in the middle, and then another peak at the end. And so we always encourage businesses to, really just push really hard towards the end of their campaign. And that's where we see another kind of wave of investment come in. And like I said, this isn't, to a T. Different businesses raise, kind of different ways and using different strategies, but more often than not, these 4 phases lead to success on Mainvest. So that's kind of everything from who we are and how the revenue sharing note works and how the fundraising process works. I know that there's a lot of information there, so I am happy to hop into a Q&A. I also want to note that we do have a Kentucky-specific landing page. And so you can head right there. You can see some of the businesses regionally who have raised on Mainvest. You can learn a little bit more about the revenue sharing note, see some different resources if you want to read about any of this in more depth, but also sign up to either get started or set up a call with our team.
Awesome. Thank you so much, Isabel. This is such an exciting way to fundraise for your small business. And I really appreciate and love the kind of community aspect of it, because I think that's kind of a main reason why everyone goes into owning a small business is improving their community. So this is just another way to do that. I just put that link in to the chat. So if y'all want to check out the mainvest.com Kentucky page, you can go to that link via the chat. And now we can open up for questions. You can either put those in the chat as well or in the Q&A box. While we wait, I'll ask you a question. So you kind of mentioned the example of the wine bar, how that was a really clear use of the funds, and they had a mission, a goal to achieve, building the patio. This is how much they needed, and it was very clear. So is there a limit or regulations around what you can use funds for? How do you need to break it out in the kind of proposal process for that?
Sure. So there aren't too many guidelines around how funds can be used. It's quite open in that way. We do have, kind of best practices, where we really believe that funds should be used for something tangible. We prefer, that not all funds are just earmarked for something general like marketing or hiring. The reason for that is because it's a little bit hard to show ROI for something like that. And we want to make sure there's a very clear path to repayments versus you know, we build out a 500 square foot extra space. We need, you know, there's like specific construction needs for that. And with that extra square footage, it is highly likely that we will see an uptick in revenue. That is just one example. I'm not saying that we only do kind of the equivalent of construction. But the idea here is tangibility and being able to tell a story to investors outside of just saying, oh, we just need some money. Working capital is
Sure.
totally fair as well. But, you know, having really just like the vision clear as possible is generally the best practice. We do want to make sure that your use of funds is outlined so that investors really know what they're getting into. It's okay if you say, all right, I always want to spend 10K on, you know, new countertops, and instead you end up spending it on, you know, signage. Like, you know, that's okay.
Sure.
We're not going to come and find you and ask for receipts, but we do want to make sure that you're not saying, okay, well, I'm going to raise 50K to build a new tap room for my brewery, and instead you just go out and buy a car. That would
Got
be
it.
not okay. So yeah,
Yeah.
it's
Perfect.
more around, you know, kind of explaining to small businesses, or explaining to investors how the funds will be used, rather, and kind of making that as clear as possible, you know, rather than having strict guidelines around how funds must be used.
Okay. Perfect. Okay. The questions are rolling in now. Gigi asks, do businesses have to have a certain credit status, or, you know, are you looking at a credit score or anything?
We are not. So we are generally looking at financials, but we're really just looking at the business holistically. So we're not doing any sort of credit check or anything like that.
Okay. And then Pruitt is asking, can you use the funds to acquire another business? Like if a local business were for sale, maybe it's like a really like beloved business to the community, and they're have to go out of business for whatever reason. Could someone raise on Mainvest to purchase the existing business?
That's a good question. Yeah, that is an option. We
Okay.
obviously want to make sure that the seller is okay with that, because it would be quite public. But outside of
Sure.
like kind of those fringe details, that would be a valid use of funds.
Okay, cool. Okay, Joe is asking, what about, like, can you use this for performing arts, where that's kind of a different service model as opposed to, you know, a restaurant or some type of, you know, customer interaction, um, retail, but could you use it for his example is stage play productions?
Technically, yes. It might be a more interesting or nuanced pitch. And there's obviously,
Okay.
you know, there would have to be like different risks disclosures involved to make sure, you know, if let's say you are raising funds to produce a play, if the play doesn't go on, how are you going to repay? Like basically, what's the contingency plan, since there's no collateral or things like that? We would just want to make sure, you know, if a restaurant can't open, chances are they've, you know, they have equipment that can go into liquidation, you know, in the worst case
Sure.
scenario. But because we don't have those strict mechanisms, we would just want to make sure, are investors going to understand this pitch? And what are the different paths to repayment? What's the vision for growth here? Just to make sure that it makes sense with the revenue sharing model, and also what is the revenue model, and kind of what will that repayment timeline look like?
Okay.
Those are the questions that we'd have for something outside of just like a regular cash flow focused business, but it is something that could work.
Okay. Yeah. Robert's asking, if you're a startup business, do you use business credit or personal credit to get funded? But you just answered that you aren't looking at credit scores, correct?
Correct.
All right. And then another question, can you use the funds to pay past debt? Like, would this be a way to like consolidate or pay down something in a better, you know, interest rate or something?
Technically, yes, because, you know, especially if you have some not great debt or super high interest, you know, the revenue sharing note can be a much better solution.
Okay.
In that case, we would just be looking at the financials to make sure that this isn't a consolidation just to, you know, make things easier. If the
Sure.
business isn't doing super well, we want to make sure that once you take on the revenue share, there is still a very clear path to quarterly repayments to make sure that investors are getting their due, while also making sure that the business debt is, you know, kind of like cleaned up in a way that works well for them. Because that can work really well if debt is like just eating into cash flow, and the revenue sharing note would be a much better option. Then if the business is going to do even better every quarter, because of that, because, cash flow is focused up, they can focus on growth, and that's a great pitch to investors. It's just a
Okay.
little bit of a funkier one because some investors don't think about the inner workings of a business the same way they do. So
Yeah.
again, it just ties into tangibility and, so yeah, those are all, and I'm getting a little bit in the weeds because I do this
All
every
good.
day. I
Yeah.
work with businesses on some really specific situations, but
Sure.
short answer, yes, that is possible. We would just take a really close look at what's really going on.
Okay. Perfect. And then if things don't go right, if the, plan just flops, can you give the funds back, or like, is there an out in some way, or do you have to do some type of revenue share? How do you handle that?
That's a good question. So yeah, firstly, if the raise doesn't go to plan, if you don't reach your target raise, all investors are refunded anyway.
Got it.
They're held in escrow until you pull them out. So we've even had businesses that were successfully raised, the project, like the lease falls through, the project doesn't work, and then they just return the funds. That's completely okay. Even if it's sort of like a halfway situation where things don't seem to be going to plan, it is okay. As long as investors are being made whole, you're not tied to the specific repayment process. You can repay early. You can pay back, in a quick chunk if, you're worried about something, but yeah, overall, there's a good amount of flexibility.
So, Leandra is asking, will we get this information in an email? Yes, we will send out a link to this session after the fact. So we will make sure to do that. And then, is it only specifically brick and mortar, or would you be open to doing something like a food truck or something mobile like that?
Yeah, for sure. We have worked with a couple of food trucks. When I say brick and mortar, I'm really just referring to something tangible in a community versus strictly e-commerce,
Got it.
or even direct to consumer. We have worked with direct to consumer, but it's sometimes a harder pitch just because you need to kind of already have the community in place to build it, like to build out a successful campaign.
Sure.
So yeah, a food truck would be completely fine. We generally have a minimum investment target of around 30K. And so sometimes what we found is with food trucks, the funding needs are just smaller, and that's where you might not see as many of them. But really, like, again, as long as it's kind of brick and mortar style or Main Street style, cash flow focused, business to consumer, generally speaking.
Okay. Okay. And then on that note about like the community and branding, like how would a business go about identifying if they are a good fit for this type of platform, and or what are some pointers in kind of building that brand awareness, and kind of what connects people to a brand that you see is really successful?
That's a really good question. So I am a little bummed. I had a slide on this, but I think it wasn't in this presentation. I usually have a slide around like kind of how to identify if you're a fit for Mainvest.
Okay. Yeah.
But I did not have that. So I will instead say it
Sure.
in my very fast New Yorker speaking, which I realize I always talk super fast. So I apologize. But
No worries.
yeah, so a good fit for Mainvest, really what it comes down to is, can you raise, can you repay? Not to sound too flippant about it, but when it comes to can you raise, it's really having, being able to self-identify who's my community, do they respond to me, do they believe in me? And am I willing to prove that out through pitching an investment campaign? It's not about even asking for money. It's really about offering an opportunity, because you are
Mhm.
going to be repaying them, with quarterly revenue. And so, it can be specific marketing things like, do my emails tend to convert? Do I get good engagement on my social channels? Do people tend to engage with me online? And if not, do people come into the store a lot? Do I have a good relationship with people in the community? And can I continue to grow that? If the answer is no, that's okay. Plenty of businesses start out relatively unknown, and by offering their product and kind of getting out into the community in more traditional ways, that's how they grow a business. With
Mhm.
Mainvest, because a lot of it is really about digital marketing, like you have a landing page and people invest online, it's really about using the channels that work for you and identifying what those are. So a brand that tends to do really well on Mainvest is something that is super community focused. There's an idea that people know and love that business, that they trust the business owner. And that is sort of intangible. But also things like having a really good visual brand helps. Not every business that's been successful has had a gorgeously designed agency brand,
Mhm.
but generally having an understanding of brand voice, nice photography, a good, visual representation of what the offerings are and what the business is. Those are things that tend to do pretty well. But it really comes into how that ties together. Even a really beautiful bakery that takes the most gorgeous photos, but never has anyone walk in the door and doesn't engage with the community might not do super well on Mainvest. Whereas a super old-fashioned bakery that has no photography. Maybe I'm just talking about my mom's business who raised on Mainvest. She raised when she had barely a brand and she had, no professional photography, but she was able to engage with the community, talk to friends and family who have had her, had her pastries and seen her career growth, and really having a combination of those things and genuinely having a community tie and being able to convert those ties into something digitally. That's the biggest indicator of success on Mainvest.
Yeah, that's awesome. Cool. So it really is open to anyone. It's just kind of knowing that your community is behind you and believing in them and then believing in you. So someone's asking about early childcare center to purchase a building and equipment. Do childcare centers fit into the bill?
Yeah, we have kind of done more play cafes just because
Okay.
there's the alternative, like the cafe business model as well. But we did just actually have a successful daycare center raise. I think, it certainly does work. And it's definitely an important issue today. Um,
Mm-hmm.
I think the reason that, the play cafes have worked better is because there's almost not necessarily like a novelty aspect, but it's both like, the cafe business model, but also the idea that it's, supervised. There's so much that goes into early childhood education. I think investors want to understand the education piece as well, because it is so, it's a serious business, obviously, and it's so
Yeah.
important. So I think that would be the biggest thing, just making sure that the pitch is super clear and the business model is super clear as well. When it comes to like purchasing a building, the revenue sharing note may or may not make sense
Okay.
because it's not a mortgage. So you
Right.
really need to make sure that if the funds are going immediately to work to purchase something, or if it's raising funds for a down payment, we really don't love that because you're going to have to repay that revenue share. And if it's going to take a really long time to generate revenue, or if there's a lot that can go wrong between putting a down payment on a mortgage and actually getting to revenue generation, that puts investors in a little bit of an iffy spot because their funds are gone. They're tied up in another debt.
Totally.
So that's again something that's not out of the question. It's been done before on Mainvest, but we really want to look at the full picture and the full plan for execution before unlocking retail investor funds just to be a down payment for something else
Yeah.
versus something where, and I talked in this one, equipment or equipment financing. That is something that's tangible. Obviously, a building is tangible, but there's a lot that goes into
A
real
lot that
estate.
goes into that. Yeah.
Yeah. So like, at the end of the day, if investor funds have gone to buying, a couple different pieces of equipment, that is something tangible, and like directly contributing to growth. So again, it's something that would be kind of case by case. But the more straightforward and the more tangible, the easier of a pitch it's going to be on the Mainvest side.
Right. Here's a question kind of on the other end of things. So how does it work on for Mainvest? Like, do clients need to pay to work with you, or do you charge a percentage of their fundraising amount to pay for being on this platform, or how does that work?
Yeah, so we don't have any upfront fees. We only take a fee if you're successful. So it's a percentage of the amount raised. It's actually a blended fee, so 9% for anyone who came from our marketing efforts or emails, our network, and 4.5% for everybody else. So usually an average of 5 to 6%. That just comes out at the end, and that covers all of our upfront fees, hosting costs, as well as the long-term repayment processing.
Okay, great. And it's awesome that you all do that long-term repayment processing, because that's a whole nother job in itself, right?
Yeah, yeah, that would be a lot.
Keep track of. And then what's the application process if folks wanted to get started with a campaign?
Yeah, so the first step is just filling out our initial kind of intake form. That's just asking the basics about, the business and your funding needs. Once accepted, that's where you really start the onboarding process. I break that down into 3 steps. It's just documentation, which is, pretty straightforward, just the documents we need for filing. The terms piece, which again, we work with the business based on their financial situation to come up with revenue sharing terms. And then the 3rd piece is marketing. So that's the pitch page, fundraising strategy. And so once those 3 steps are all done, provided, there's no hiccups with any checks or, like concerns on the fundraising side, that's where we handle all of the filings and get the raise up and running.
Okay, great.
So it really is more of a partnership rather than an application process. Like there's an element of applying because we want to make sure that businesses generally are a good fit because we have a pretty like time, like resource constrained team. So that's where we generally, we kind of filter in businesses, but then from there, it really is less of an application and more of a partnership to make sure that it's going to be successful because our incentives are aligned with only launching businesses that are going to be successful. So it's less around, applying to Mainvest and more around working with us to figure out what's going to make the most sense.
Okay. Someone else is asking, would you fund expenses for studio rental space for fitness services? So it sounds like they want to rent a space to host like training, personal training, gym, things like that. Would that be an appropriate use?
Yeah, most likely. We actually have a yoga studio on right now that's raising.
Okay.
And a lot of their use of funds is, partially build out, but partially just, the expenses associated with running a studio.
Yeah.
It would likely work.
Okay. I have another question. So from like the investor standpoint, like, is there an opportunity for folks to just go on and look on Mainvest just to see what's out there? Or what's the thought process for investors to possibly put money into certain projects? Is it just an open platform? Can anyone go on and look and pledge, or how does that work?
Yeah, so it is open to anybody. We, right now we're really focused on empowering businesses to raise from their networks because we find that leads to greater success down the road. But anybody in the country, can go find Mainvest, explore opportunities, and really build a portfolio, whether that's local in a specific location or if it's, be it tied to industry or specific terms. So basically we're filing this with the SEC. So all of the information is open to everybody. So it's very clear, like, here's what the terms are, here's the pitch, and anyone's really able to go. So even if you market something to your community, they're able to go browse your opportunity, but also get a sense of what, other opportunities on Mainvest are like.
Right.
And, that's also where people who might hear about it kind of offhand can go on Mainvest, search for local opportunities and find yours.
Yeah. Okay. Great. Well, I am not seeing any other questions come up right now. Oh, wait 1 second. Do you have investors that fund real estate like flipping houses?
So that's an interesting question because again, it comes down, it's not really about Mainvest's investors, it's about a business's investors and really turning everyday people into investors rather than just having, like a super high net worth person in your network who can invest in you.
Or
So if you are looking to start flipping houses and kind of working in real estate that way, it's can you pitch that vision to investors and get them investing in you? We have done that a couple of times. The revenue sharing note in theory works really well because the idea is if you're going to do this numerous times, each time you flip and sell, that's revenue and that is what gets paid out to investors. But because it's very chunky and highly risky, it in our view isn't necessarily the best use case, but we are always open to it. I think kind of working in different types of real estate is really interesting because it can be really powerful for our community. So something we'd be open to hearing about, but want to make sure I'm being super upfront with my reasoning and explanation there.
Sure. Yeah. They said thank you. That makes sense. And do you all kind of in the working together process do kind of like some mentoring or coaching in a sense, one-on-one meetings about like this might be the best process to present your idea, or like we suggest that this is how you might want to lay it out for folks? Is that part of the beginning process with Mainvest?
It's definitely part of it. We are a little bit limited in how we can provide advice or kind of like mentorship or coaching, just because we are at the, like, we still have to be a third party platform.
Got it.
In terms of kind of putting on our investor hats and saying like, here's, we hear you, like we've been having all these conversations with you here. Here's how we recommend laying out your offering page, or your offering page says X, Y, and Z, but it should really say A, B, and C. So we don't do a ton of business advisory in terms of getting into the weeds of a business. We prefer if a business is coming to us like pretty fully baked and ready to go. But throughout the process to make sure, because at the end of the day, it's not every day that a business goes out and raises funds this way. Like regulation crowdfunding has only been around since like 2016. So in terms of helping a small business owner understand how to pitch retail investors, that's absolutely something where we kind of provide a little bit more, insight and support, because a business generally knows how to sell themselves, on the surface, but then really kind of refining that to be a pitch is something where we definitely, provide some input.
Awesome. And then how soon do you know if you have been selected, like from the application point or first point of contact? What's the timeline for getting up and running or knowing if you're a viable option?
Yeah, it's usually only like a day or two. We try and go through kind of new intakes really quickly.
Awesome. Someone else is asking about farmland. Would that be an option? Because we're in Kentucky, so we always have to think about like the rural aspects. Louisville's more of a city landscape, but outside of that, it's lots of farming and rural businesses. So, would there be an option for that?
Yeah, for sure. Agriculture is something we're really interested in, especially like supporting local farmers, like local food ecosystems.
Yeah.
But really just agriculture in general, I know it's outside of just, specifically, farm stands and things like that. So,
Sure.
yeah, definitely something we're interested in. The specific project, again, we would just want to dig in and make sure that the revenue sharing note is the proper option. We do also like I will note that we don't only do revenue sharing notes. If a business comes to us with an equity agreement, if they want to do a crowd safe or some other form of equity, if they're a co-op or something like that, we can support those. It's just when it comes to like preparing documents, we really focus on the revenue sharing note. So it's basically like if you have an alternative investment agreement that you have in mind and you're bringing it to us, then generally that's fine. We just don't kind of build them from scratch. But yeah, agriculture is something we're really interested in doing more of.
Awesome. That's good to know here. All right. Well, this has been so informative. I even have an email in my inbox from this webinar already. Latoya, we'll talk soon. And I'm going to drop my email in the chat. If you all have further follow-up questions, I can always reach out to Isabel, and then definitely check out mainvest.com/Kentucky just for more info around our area and how to get started that way. And we can kind of chat back and forth, Isabel and I, for folks that reach out and are interested.
Yeah.
So thank you all very much. Thank you so much, Isabel. This has been super informative. I love the whole, idea behind Mainvest. And I, even more so now that I'm more familiar with it, I'm going to keep pitching it to my clients. So
awesome. Thank you so much. Really nice to meet everybody, and let me know if you have any questions.
Great.
Yeah, it was great to talk to you.
Yeah, and there is going to be a survey at the end of the call. So if you all don't mind to fill that out, we would really appreciate it. And we'll see everyone next week for our next Toolkit Tuesday. Thank you.